Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report. And wow, we're going to show you something you haven't seen in a while. October 5th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And first of all, let's look at the QQQs. This is the NASDAQ 100, and we can see that it gave us a sell signal up in here, and it certainly did sell off right down to that 20-day moving average, held in there, and then all of a sudden Friday took off like a rocket because we got good news on the economy. In other words, the economists are now saying, we're not even going to go into recession. So that's a good sign for the market. And boy, it really took off, did a nice job on Friday. Bounced off this 20-day moving average, 20-day exponential moving average. And see, it went down there, tested it for 3 days in a row, and then finally just took off. Got this little short-term buy signal in here, and that's what gave it away. So we were very fortunate in here. We like that, and the portfolios are doing very, very well, especially the top stocks in our QQQs, which are more than doubling the QQQs themselves. So the top stocks in any ETF, and that's what Clean Surplus is all about. We pick the top stocks in any index, and we expect those top stocks to outperform the ETF or index or mutual fund. Why? Because each ETF, each mutual fund has good stocks or above average stocks, and they also have below average stocks. So why not just pick the above average stocks, buy them, and walk away, and you will way over 90% of the time outperform the ETF itself. So let's go to the XOP. Now this is the S&P, or the SPDR, oil and gas exploration, and you can see in the past couple of days, because of the troubles in the Middle East, in other words, are the Iranian oil distribution centers going to be attacked? That's the question right now, and that is bringing the price of oil way, way high. And it had been going down. I mean, look at this from the beginning. It's going down, and then all of a sudden it is shooting up. This signal down here is a definite buy signal, and it's been a buy signal for almost a month now. And then when we look at the energy, and this is the SPDR Energy, XLE, same thing. We're seeing the same type of movement, seeing the same type of signals down here. Big volume. See these vertical green lines? That represents, or these lines represent, the volume on the up days. The red lines represent the volume on the down days, and you can see these volumes on the up day, the volume on the up days for the energy and also the XOP, which we just looked at, very, very high. Now, we want to show you what our top stocks did over this this year to date. So the 29th of December was the last trading day of 2023, and now this was the closing of the 4th, which was Friday. And we can see the S&P 500 up 20.6%. It is having a magnificent year. Our growth, all our portfolios are above the S&P 500, way above the S&P 500. But we're not talking about that right now. We're talking about the energy sector. Energy is just up 11.1%. So after all of that, let's go back. After all we've said and done, we can see this thing has been on a downtrend. This is the energy, has been on a downtrend, and we can see now it is half, or a little bit more than half, of the S&P 500. But what about our top 5 stocks? Well, when we look at the top 5 stocks, we're looking at an average of 29.5%. And these are stocks we've had in this portfolio for a very long time. 29.5%, folks, that's 3 times the ETF itself. So when you're looking at the clean surplus return on equity, and you can use the clean surplus in order to compare one company to another, not only in the same industry, but in other industries as well. So we have a 30-stock portfolio that covers stocks from all the industries. Then we have our ETF portfolios, which are way outperforming the ETFs themselves by double in most cases, and that's just for this year. But we're talking about the energy right here, up 11%. The energy ETF, which we use, is the Spider, and it's the XLE. Spider means it's put out by S&P. The XLE energy up 11.1%. Our top 5 stocks that have a certain return on equity above 20% or close to 20%, up triple the ETF itself. So we're up, our top 5 stocks up 29.5%, the energy up 11.1%. So it goes to show, if you want to get into any of these ETFs, you want the top stocks in those ETFs. You don't want the ETF, you want the top stocks in those ETFs. And let's see what the XOP, so oil and gas exploration, and XLE, the energy, have done relative to the S&P over one full year. Now, this is not year to date, it's one full year. Black line S&P 500, and you can see that energy and oil pretty much follow each other, don't they? Well, they're not down for the year, but they're up just slightly for the year, with the S&P up 35%, having a magnificent comeback from that drastic year of 2022. So S&P 500 up 35%. We have the XOP up about 3%, and we have the energy up about 10%. Nowhere close. Over 5 years, well, it looks a lot closer. But let's come over here, folks, with the XLE and the XOP. So energy and oil and gas up about a little over 60%. The market is up close to 100%. That's a big difference. Over 5 years, we're looking at almost 2 to 1. Now, where do our portfolios, and I'm talking about our 30 stock growth portfolio, I'm talking about the top stocks in the QQQs, which are the top stocks in the NASDAQ 100, and the top sector stars. We have a sector star portfolio where we take our favorite ETFs and the top stocks out of those favorite ETFs, and they are all up in here, folks. They're all doubling, just about doubling the S&P. In fact, they are doubling the S&P over the past 5 years. So our portfolios are doubling the S&P 500. So those of you who are in the oil and gas exploration and in the energy are underperforming the S&P, and if you're not in our portfolios, you are doing just half of what our portfolios are doing. Why are our portfolios doing so well? Because we pick the best stocks in all those ETFs, and that's what we use. We take the best stocks in the S&P 500, and over the past 22 years, we have a 22-year track record. Over the past 22 years, on a compounded basis, 2.5 times that of the S&P 500. So over 22 years, we're way up here, folks. And those are the stocks that you want to see. And those are all the stocks you've heard of. It's not like we're playing with penny stocks or anything like that. These are real good companies that have been around for years. And yes, we are in the best companies. So, folks, here it is. What's this week going to show? What's going to happen in the Middle East? In other words, is this a rising sun or is this a setting sun on the oil and also the energy ETFs and the top stocks in those energy ETFs and the oil and gas ETFs? Well, I'll tell you right here, this is the rising sun. And I just want you to remember, if you want to walk on this beach like Jimmy Buffett once did, and he had a home up in Palm Beach about 5 miles north of this beach, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. All right, folks, we had a pretty good week in those indices and all our indices, and it looks like the market wants to come back with the good report on Friday about the jobs report, and the market is saying no recession at all. So we'll see what happens this coming week, folks. It's all about the Middle East right now, and our economy's doing good. And that means the world economy will eventually catch up, and we'll see what happens this coming week. Folks, go out, clear your heads, have a good weekend, have dinner with your family on Sunday, and guess what? The market will be here next week, and we'll see you in a couple of days.